Hey, how you doing? This is George Newkirk with Keller Williams Realty. You may recognize me from my video blog, Keeping It Real in Real Estate, and I'm here with...
I'm Mireille Von Trapp-Paul with Keller Williams, and I give you live looks. And we have Dave and Ted here, our wonderful lenders.
Hi, and I'm Dave Lucchini. This is Ted Wells. We're with American Pacific Mortgage. We're located in the San Ramon area, covering the East Bay. Today we would like to briefly discuss the FHA Home Purchase Loan Program. And with the opportunity in the marketplace today with the low down payment, 3.5%, and the historical low rates, we thought this is a great opportunity to buy instead of renting in this current market. Ted Wells is going to talk briefly about the underwriting guidelines and what you might need to do to prepare yourself to purchase a home. Ted?
Hello, I'll give you a brief overview on FHA underwriting guidelines with respect to purchasing a home in today's market. There's a few things we look at when it comes to a home buyer looking to purchase a home. Currently, when we look at credit, we're looking for approximately a 640 credit score. We're looking for any bankruptcies or foreclosures you may have had in the past. If you've had a bankruptcy, we want to make sure that that bankruptcy at Chapter 7 has been discharged for at least 2 years in order to qualify for FHA. If you've had your home foreclosed upon, we want to make sure that that foreclosure has been done for at least 3 years. If you contact us directly, we can go into much greater detail with that and review your credit report with you. With respect to income, we want to make sure that you've been on your job for 2 years. You can have changed employers, but as far as changing positions, you want to make sure you're in the same line of work in order to qualify. Additionally, with respect to assets, we need a down payment of 3.5% on an FHA loan. As an example, a $200,000 purchase would require $7,500 down. What we're looking at is to make sure that that money that you're going to use for your down payment is seasoned. All that really means is that that money has to have been in your account for at least 2 months, and we can track where that money came from. So for example, if George Newkirk had given me, was a relative of mine, and given me $7,500 for my down payment, I can use that as long as it's been in my account for at least 2 months. Additionally, if he's a relative of mine and I can't season it for 2 months, he can gift it to me. FHA allows for gift funds as well. And again, we'll go into that in more detail with respect to the down payment, the closing costs, and purchasing a home. And I think most importantly, what we really want to convey to the general public is, regardless of your credit situation and credit history, you need to try to get pre-qualified with a lender, especially a team like Dave and I. We have a lot of experience in the business working with Mireille and George Newkirk and their clients. And if I was in the position to buy and didn't own a home right now, I would definitely consider doing so. With rates at historic lows, your rent that you're currently paying where you're living in the East Bay may be more than what you would have for a current mortgage payment with principal, interest, taxes, and insurance. Now is an excellent time to buy. Get pre-qualified. You've got outstanding real estate agents to work with and an outstanding lending team to work with. They'll be more than happy to lead you through the maze of home buying today. George, do you have any questions for us?
Ted, let me ask you, really quickly.
Sure.
If I'm paying $1,500 a month rent, would I benefit from buying a house today?
Without a doubt. I can't stress that enough to home buyers. If I'm paying $1,500 a month in rent, I'm throwing out approximately $18,000 a year out the door. If I'm paying $1,500 in mortgage payment, I'm going to get the ability to write off the interest that I've paid. And let's say that $1,500 that I'm paying in my mortgage payment, George, let's say $1,000 of that goes to interest. That's a $12,000 write-off to offset my taxes at the end of the year, which lowers my tax base. And not only that, I will gain equity in this property. It may not be in 6 months, it may not be in a year, but I've got to pay rent somewhere. Why not pay a mortgage payment in 5, 6, 8, 10 years from now, have some equity built up in your property, and you wouldn't have thrown that money away that you've been spending for the last few years renting.
Now that's keeping it real. Mireille, is there something you'd like to add?
Yeah, I did want to add one thing. Right now the market is really hot and buyers are out there purchasing properties for over list price, which means if that keeps up, eventually prices are going to go up for homes. So I think it is an excellent opportunity for home buyers to get in on a property. With our excellent team here, we hope that you'll contact us. Thank you so much.
Thank you for joining us. We hope to bring you more value, and if you have further questions, please feel free to contact us. Again, we have Dave and Ted from American Pacific Mortgage, and we hope to hear from you.